Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, July 2nd, 2009. Well, today got off to a bang, folks. We had a monster gap down off of the employment and jobs data, and I'm going to cover that in depth here, but I also want to discuss what the markets are doing, and we are seeing a pretty significant decline across the board. The Dow is down about 175 points or 2%. The Nasdaq is sitting down about 45 points or 2.4%, and the S&P 500 is down about 21.5 points or 2.3%. Now, again, this is all because of the jobs data today really causing a master sell-off, and what we saw was the jobs data, the employment rate coming out, and it was very, very ugly. We saw the ADP number yesterday come out, and we talked about how that was not a good number, but the market still stayed up, even though oil really dropped down as well. And that same effect happened today, but the difference was that the markets really did fall to the ground here. They dumped out big time. We're seeing a nice 2% decline across the board. Now, what really was going on there? Because when you come out with employment data like this, obviously it punches a hole in what we've been thinking, which is, well, the green shoots, right? I mean, that's what everyone in the media has been saying. That's what Obama, Geithner, and Bernanke have all been saying. Granted, we've been kind of sitting back and saying we don't see it, we don't see it, but they've been saying it, and everyone's been believing it, and you've been seeing an underlying bid, whether it was propping in the markets or other facets working at work here. But that's the bottom line. You've had a lot of negative economic news, but the market hasn't really fallen. I mean, you could just quickly glance at the daily chart if you want. I won't cover that in this video. You can have to tune into the Research Center video tonight to cover that. But you can look at the daily chart and see that we're relatively near the highs of this market. We're basically 40% off the lows from March, and this market's been holding up even though the economic news is not confirming the green shoots theories that have been out there. Again, as I mentioned, that's what we've been on top of. We've been right on top of the moves, that the fact that this has kind of been a faulty move, mostly propping going on. The market seems to finally be getting some realization here on this light volume Thursday action before the July 4th holiday. Tomorrow the markets are closed, Friday action. Okay, now bottom line is this, guys. You can see the market's hovering just off the lows right now. We gapped lower. We gapped right down and took out a major level at 91. As soon as you took out that 91 level, you knew you were going to go to our master level of 90.50. All right, 90.50 got hit perfectly, and then you saw a nice little bounce here. That was a good scalping play in the chat room for a nice little bit of a scalp. Then after one solid bounce, you came right down and went right through it, and in fact actually came all the way down, basically making the lows of the day right at 10:30. For those of you that pay attention to our mantra there, you know that price pattern time is a key, really religious area for us. We focus on that. It can be referred to as our religious trading guide, and those levels and those keys to the market are everything you need to know. In addition, trendline analysis really gives us every point on this market, and you can see it working perfectly today. These lines, again, we had on our charts yesterday, the day before, last week, last month, same lines, same effects. Look at how accurate they are. Right down to this blue line, one candle bounce. You take out the blue line and come down right in the middle before our next lower support here at $90, and before you get down there, you bounce back up. Where do you retrace? Right to this blue trend line. At that point, you start to sell, make a new lower low, but you really close off with a nice little tail there that tells you that buyers are stepping up right above this 90 support level, which is a monster support level in the markets. And you can see we're just trading perfectly sideways. There's zero volume left in this market. We actually had a decent volume morning because of the news and because of the panic, but it's now died out, and that's exactly what you're going to see for the rest of the day, folks. This is a holiday week, holiday shortened week. Tomorrow the markets are closed. You're going to have to look to next week. We have some key things going on next week. I strongly encourage you to sign up for the Research Center to get the top guidance on that, what's going to happen next week, because it is going to affect the markets, and you have to be prepared for it. There's no ifs, ands, or buts. All right. Now, the bottom line is this. Again, you're upticking now a little bit. Would it shock me to see an uptick into the close today? Not at all. Why? Because the volume is light enough for propping to occur. Propping, again, is the key when light volume or volume is so light that it's very easy. One or two buyers, select buyers, whether it's PPT, Goldman Sachs, JP Morgan, whoever it is, can keep the market afloat or push it off the lows a little, kind of go into the holiday weekend maybe slightly off the lows. That would not surprise me at all. If I had to take a guess right now, I would actually have an upside bias into the close off of this level right here, and we'll call it right at the lows here. So we'll give it this point right here as an upside bias off of that. You can see we're upticking already, and that's at 90.15. So we'll see at the end of the day if we close below 90, above 90, where do we close on this market? If we did close below 90, it could obviously be something more significant, and we'll have to discuss that. It could either trigger a monster bounce come next week, or maybe it triggers continue selling next week. Again, I won't divulge that in this video. That's strictly for our premium subscribers to understand as we talk about it. But again, you can see the market upticking. You have the 20 moving average now crossing down into current price, just about there now, right around 90.35 to 90.30. That'll be resistance. If you get through that 20, you're going to look for support resistance at 90.50, which was a master level here. You can see the pivot high as well. And then if you get through that, you'd look for the move all the way back to 91, which, I would be I guess maybe a little shocked to see it move all the way up there, but not as shocked as I would see to be a move lower today, really taking out the lows and making a low below 90 into the close. That would be more shocking to me than a move back to 91. Again, you can see how I'm angled here. I'm definitely angled towards the upside of this market going out from this point because of the light volume, and you can see how the markets are now starting to trend sideways already, and the sellers have just gone on vacation. Everyone's taking off, and there's really no sellers left. Again, buyers are still there. You still have the propping can come in at any time and cause a monster buy program to get us back up a little off these lows. All right, so again, just to keep in mind, guys, you're seeing exactly what we talked about going into the second halves of the day. Every day this week we've talked about in our intraday and nightly videos about how you have the volatility in the morning, and then really right around 10:30, 11, the markets will start to lose the volatility because it's the second half of the day of a holiday week, especially today, and then you're seeing that happen. So again, yesterday you can see we made the big push on the gap up yesterday, and then the rest of the day we kind of went sideways to down. If you go back to the day before, you had the big push down and then sideways to up for the rest of the day. And you can see how you're just kind of consolidating or trading sideways off of the initial move, and even take a look at back to Monday. Monday, little bit of a push down monster move, and then look at what happened to the market, sideways action. So point being here has to be understood that that's what you're seeing second half of the day. You should continue to see that. Monday should be an interesting day because there's not a lot of news coming out. You should have a little fluctuation based off of today's news, obviously, but for the most part it could be a very light Monday. We'll have to see where it trades in this market. All right, guys, that's pretty much it. I do encourage you to all come join the chat room if you're an intraday trader, or even if you're just looking to have really excellent guidance. You can come and ask us questions, anything you might want to know about the markets, as we give play-by-play technical levels, call-out trades, whatever it may be. We give it all in the chat room to our premium subscribers. In addition, the Research Center, check out what's included at InTheMoneyStocks.com. Again, that's InTheMoneyStocks.com. Monster stuff included there, about 5-6 different services, all included for $49.99 a month. The guidance is second to none. The education is second to none. The picks are second to none. Enjoy it. We do, as always. Now, last thing I just want to mention, a week from this Saturday is our webinar series, our methodology webinar. I do encourage you also to join that. If you really want to get into cycle analysis, trend line analysis, the hardcore stuff that we really don't cover in the Research Center or in the chat room, this is where you're going to find it out. So I do encourage you to sign up for that. Take care. Have a wonderful holiday weekend. Be safe. We'll talk to you next week.